Welcome back to ZBCN Today, the channel where we cut through the noise and focus on what actually matters. Retail narratives often frame tokens as inevitable breakouts, while insiders quietly exit positions. This analysis instead focuses on fundamentals, partnerships, execution metrics, and tokenomics to determine whether Zebec Network, ZBCN, merits serious consideration in January 2026. As of mid-January 2026, ZBCN trades between approximately $0.0031.4 and $0.0035.4, with a market capitalization near $334 million. The token is down roughly 45% from its May 2025 all-time high of $0.0064.5, when Ripple partnership speculation drove aggressive inflows, and remains below the brief $0.0070.7 spike recorded during peak euphoria. Over the past 30 days, ZBCN posted 13 green closes out of 30 sessions, reflecting a 43% positive close rate and volatility of approximately 7.6%. The RSI currently stands at 60.74, indicating neutral market conditions. Technical indicators show 3 buy signals and 10 sell signals out of 17, pointing to bearish short-term momentum. The Fear and Greed Index stands at 49, reflecting neutral sentiment. This is not the profile of an asset approaching breakout conditions, but of a market awaiting conviction. Zebec Network is a protocol for continuous streaming payments. Instead of receiving wages bi-weekly or monthly, employees are paid per second, enabling immediate access to earned income. This reduces reliance on payday loans, lowers payroll processing costs for employers, and enables instant cross-border settlement using stablecoins instead of traditional banking rails. The technology has been operational since 2021. Zebec has processed over $300 million through its PayBridge platform and offers 2 Mastercard debit cards, the Zebec Silver Card and Zebec Black Card, which allow crypto spending with automatic fiat conversion at point of sale. Zebec also operates WageLink, a compliant payroll application, and integrates with Circle for USDC settlements and Stellar for cross-border transfers. The key question is whether these fundamentals justify a major re-rating of ZBCN in 2026. This requires separating hype from adoption, particularly around high-profile partnerships. In late 2025, Zebec announced integration with JPMorgan's Kinexys platform, formerly known as Onyx. Kinexys is JPMorgan's institutional blockchain platform for enterprise payments and tokenized assets. The integration enables institutional clients to access continuous streaming payments for cross-border transactions using Zebec infrastructure. This partnership validates Zebec's technology at enterprise standards. However, JPMorgan did not invest in ZBCN, is not promoting ZBCN as an investment, and is not holding the token on its balance sheet. This is a B2B technology integration in which economic value accrues primarily to Zebec as a company through licensing and platform usage. Whether value accrues to ZBCN holders depends on whether transaction volumes scale meaningfully and require ZBCN for network fees. Zebec has not disclosed revenue or transaction volume figures from this integration, making the impact on token valuation unquantifiable at this stage. This pattern is common in crypto. Institutional partnerships generate speculative inflows, prices rise, and then retrace when adoption timelines prove longer than expected. The Kinexys integration is real and meaningful, but expecting it to drive explosive price growth in 2026 appears premature. Zebec has also invested heavily in regulatory and compliance positioning. The company achieved SOC 2 Type 2 compliance in September 2025 and is pursuing ISO 27001 certification by the end of 2026. It is working toward MiCA compliance for European expansion, acquired GateKnox for KYC and AML infrastructure, and partnered with Uphold Institutional for regulated custody. These measures reduce friction for enterprise adoption, but increase near-term costs. Compliance improves long-term positioning, but does not immediately translate into revenue, contributing to uncertainty around valuation. Tokenomics provide further context. Total supply is 100 billion tokens following the 10-to-1 split in 2024, with circulating supply at approximately 97.95 billion. Meaning roughly 98% of tokens are already in circulation. This limits future dilution. A final token unlock in March 2026 will complete early investor allocations, after which supply dynamics become utility-driven rather than unlock-driven. Zebec has implemented monthly token buybacks funded by card revenue, repurchasing and burning $60,000 worth of ZBCN in July and August 2025. The company has introduced tiered card rewards where ZBCN staking unlocks benefits, with APY ranging from 10% to 30% depending on lock duration. As of July 2025, Zebec reported approximately 11,900 cardholders. The bullish case assumes card adoption and payroll volumes grow sufficiently to scale buybacks and drive sustained deflationary pressure. The bearish case is that adoption must significantly accelerate to offset staking emissions and justify material repricing. Everything you hear on ZBCN Today is for educational and informational purposes only. Nothing in this video should be considered financial advice, investment advice, or a recommendation to buy or sell any asset. External price forecasts reflect this moderate outlook. CoinCodex projects ZBCN falling 25.57% to $0.002335 by February 15, 2026, recovering to $0.002559 by July 2026, and reaching $0.006807 by January 2027. CoinLore forecasts $0.005355 by the end of 2026, implying 51% upside from current levels. TradingBeast projects a range of $0.0030.41 to $0.0035.17 for 2026, effectively flat. Wallet Investor estimates $0.0041.45 by December 2026, implying roughly 17% upside. None of these forecasts suggest explosive upside. The most optimistic mainstream projections point to moderate gains rather than exponential appreciation. Potential catalysts must therefore be evaluated carefully. Large-scale enterprise adoption would be the most meaningful driver. If multiple Fortune 500 companies were to deploy Zebec payroll for international teams processing billions in annual payroll, transaction volumes and fee demand would rise materially. To date, only pilot programs exist, with no publicly announced production-scale enterprise deployments at that magnitude. The Kraken listing in October 2025 provided a liquidity boost and produced a 30% short-term price spike, improving accessibility but not altering fundamentals. Exchange listings create liquidity, not sustained value. Regulatory clarity could act as a structural catalyst. Clear SEC guidance on streaming payment tokens or smooth MiCA implementation driving European institutional adoption could accelerate growth, but regulatory processes remain slow and unpredictable. Ripple ecosystem integration could be significant if Ripple's Rust stablecoin integrates alongside USDC, and discussions from May 2025 materialize into formal collaboration, expanding Zebec's reach into Ripple's 300-plus banking partners. However, this remains conceptual rather than operational. Execution risk remains a central variable. Zebec has raised $21 million from investors including Solana Ventures, Coinbase Ventures, Circle Ventures, and Lightseed Venture Partners. The company has made strategic acquisitions, including ScienceCard for education payments and GateKnox for compliance. It has expanded across BNB Chain, Near Protocol, Arbitrum, and its own Nautilus Layer 3 solution. However, adoption metrics remain modest. Approximately 11,900 cardholders after several years of operation suggest limited consumer traction. The absence of disclosed revenue or transaction volume figures complicates assessment of real-world usage. The token's 45% drawdown from peak, despite positive announcements, indicates that markets remain unconvinced execution velocity matches narrative expectations. Another factor is token concentration. Reports from 2025 indicate that Uphold holds approximately $100 million in ZBCN, though some sources cite figures closer to $35 million. Regardless of the precise amount, this represents significant institutional custody concentration. While this demonstrates confidence, it also creates downside risk. If Uphold reduces exposure for portfolio or risk management reasons, selling pressure could suppress price irrespective of fundamentals. On-chain data reinforces caution. Spot cumulative volume delta has declined approximately 32% since May 2025, indicating reduced retail participation. Fewer new buyers are entering despite partnership announcements, suggesting either skepticism regarding token value accrual or fatigue following the May rally. The DePIN sector received regulatory tailwinds in October 2025 when the SEC issued a no-action letter classifying DePIN tokens as non-securities. Zebec benefits indirectly through its Zebec Net partnership with World Mobile for decentralized identity and mobile connectivity. However, DePIN infrastructure buildouts require years to generate meaningful revenue, limiting near-term token impact. Given these dynamics, Zebec Network does not currently appear positioned for explosive upside in 2026. The fundamentals support gradual appreciation if execution continues and adoption expands, but not exponential repricing. Conservative estimates of 50 to 100% appreciation over 2026 appear plausible if partnerships convert into revenue and card adoption accelerates. However, breakout-level performance would require multiple catalysts aligning simultaneously: a formal Ripple partnership with product deployment, a Fortune 500 enterprise publicly announcing Zebec payroll implementation for tens of thousands of employees, regulatory clarity driving institutional inflows into compliant streaming payment platforms, successful consumer-facing product launches driving viral adoption, and sustained token buybacks producing a supply shock. While possible, this confluence appears unlikely within a single year. Downside risks remain material. If enterprise adoption stalls, compliance costs consume resources without revenue scaling, competitors such as Stripe or modernized legacy payment providers capture market share, or the Kinexys integration fails to generate meaningful transaction volumes, ZBCN could trade sideways or decline through 2026. Current technical signals, with 10 sell signals versus 3 buy signals, reflect this unresolved risk profile. The final token unlock scheduled for March 2026 introduces tactical volatility risk. Historically, unlocks create selling pressure as early investors take profits. Although 98% of supply is already circulating, limiting dilution, the psychology of final unlocks often triggers fear-driven selling. If ZBCN dips around the March unlock window, it could present an opportunity for long-term investors aligned with the multi-year adoption thesis. As of January 2026, Zebec Network presents as a legitimate infrastructure project with real technology, real partnerships, and credible regulatory positioning. However, the gap between current adoption metrics and breakout-level growth is wider than market narratives suggest. At current levels around $0.003 to $0.0035, valuation appears roughly fair to slightly undervalued. Upside to $0.005 to $0.007 over 2026 is reasonable if execution continues, representing approximately 42% to 100% appreciation, but not explosive returns. If you're getting value from this kind of focused, fundamentals-driven Zebec content, make sure to hit the like button, subscribe to ZBCN Today, and turn on notifications so you don't miss future updates. It directly supports the channel and helps this research-driven community grow. Drop your thoughts or questions in the comments. I read them all. Now let's continue with the real analysis.